found on SYGNUS Group's website. I would like to now welcome Mr. Jason Morris, our Chief Investment Officer and Executive Vice President of SYGNUS Capital, will be guiding us through the presentation this morning. Over to you, Mr. Morris.
Thank you very much, Ryan. Good morning, everyone. Hope you're having a great weekend on today, Thursday. So, as usual, as customary, as Ryan has said, all the information, whatever we present here is not the fullsomeness of all the information. You need to go and read or take this earnings call in conjunction with the financial statements, and also read them in conjunction with the audited financial statements so that you can get a complete picture. Okay, so that being said, to start off, I want to just address a number of milestones and provide some additional color on what would have occurred over the 9-month period as well as during the quarter. So the first thing I want to address is that the issue of, well, not an issue, is to address deployment, right? And I need to flip to this slide, right? So during Q3, and I need to create this context, because on several previous earnings calls, we would have made certain comments and given certain directional views to shareholders and prospective shareholders, so that they can have a full understanding of what they have invested in, given that SCI, as simple as the business model is, it does have a few complex parts. I'm going to try and peel away some of the onion with this introductory slide. So first thing I want to point out is that during Q3, SCI achieved a major milestone. For the first time, in its history, in one single quarter, the combined platform, which is SCI and its subsidiary, the Puerto Rico and St Financial Corporation, combined would have deployed $57.5 million. In other words, exceeded $50 million in a single quarter, which is a massive achievement, for for SCI's private credit platform. Not only that, but SCI itself, which excludes the Puerto Rico legacy business, which, going forward, I'm going to start introducing some new terminology. I'm going to start calling SCI English Caribbean and put SCI in bracket and keep that separate from Puerto Rico, which is Spanish Caribbean. And you'll see why as we go through multiple follow-up earnings calls. So the English Caribbean, or SCI, as you formerly know, actually, would have deployed $34.8 million in a single quarter, which is a new record. Not only that, but in terms of deployment to Jamaican companies, SCI would have done $23.9 million, which itself is a new record. And within that, SCI would have also done its largest ever deployment of capital to a Jamaican firm, which is a new record, right? So the first point that I'm making here is just deployment during the third quarter, and what the combined operation would have done, but what SCI itself would have done, and how would have deployed capital, and where the largest amount of that money would have gone, right? I want to also highlight that the Puerto Rico business during this quarter would have syndicated down more than $20 million worth of transactions, right? And that even though SCI didn't execute any origination, what it did, it actually executed a transaction where the intention of the transaction, the transaction had syndication partners. That's the best way to say it, which would have been more than 20 million. So during the quarter, in terms of just movement of capital and deploying of assets, of capital into new assets, would have been very, very strong. And of course, all of this would have been facilitated by the fact that SCI would have raised more, all of what happened on the Jamaican and the SCI side, or the English-speaking Caribbean side, would have been facilitated by the fact that SCI would have raised, substantial record amount of capital in the preceding quarter in December. So that's the first thing I want to focus on to create context. So the second thing I want to do is, if you look at the 9-month period, there's another milestone. So for the first time in its history, or I should say, SCI achieved the fastest deployment to 100 million, or got to $100 million in deployment in at its fastest pace in history, which would have been over that 9-month period. So during the 9-month period, deployment was 114.5 million across the business. And here now you're seeing where Puerto Rico coming to the fore, right? Because Puerto Rico was responsible for $67.8 million worth of that deployment, which is a new record for the Puerto Rico business. I think since SCI would have done the acquisition of the Puerto Rico business 2 years ago, the deployment is about 175 million US, right? Which is simply incredible on that platform. Of course, the business is in 100 million US dollar economy, so you should expect fast rates of growth. So the deployment in Puerto Rico, which I label here Spanish Caribbean, is up 50.5% over the 9-month period. And the deployment for the English-speaking Caribbean, which includes SCI, over the 9 months, is up 32.1%. So you can see where, I think several quarters ago, we gave a kind of, want to say, forward-looking expectation that we expect Puerto Rico sooner or later to outpace the growth of SCI on a consistent basis, or in a steady state, and be larger than SCI. And we are starting to see, that kind of expectation coming to the fore, right? Even though Puerto Rico is still, in terms of balance sheet size, still half of what SCI is at this stage. But you can see just the sheer size of the economy. Puerto Rico team is able to do a lot more than us on a consistent basis. So hats off to James and the Puerto Rico team, Raul and the whole gang over there. Fantastic effort by them, tracking out some new records. Speaking of Puerto Rico, I want to also bring to the fore, because we're going to discuss it later on, the fact that for the third quarter, the Puerto Rico business, has kind of achieved a new threshold level of profitability. So in the December quarter, and again in this quarter, the business would have sustained more than $1 million US in net profit, right? With the third quarter being the highest quarter in net profit in the company's history. I won't say exactly what the exact figure is, but needless to say that the average net profit over the last 2 quarters sequentially, December quarter and March quarter, is over $1 million US. And again, if you think about how much net profit SCI would have made, which in SCI's financials you have embedded in it some of the net benefit from Puerto Rico, you can understand what's happening, right? Ultimately, as the Puerto Rico business really ramps up and gets to steady state, sometime in the near future, right? What's gonna start happening is dividends from the Puerto Rico business is gonna start flowing up to SCI, which means that SCI shareholders will soon start to begin to get the benefit of the profitability level that the Puerto Rico business is achieving. Once we get to what I'm gonna refer to as steady state, we're not there yet. If you recall, at the start of this financial year, July 1st, that the Puerto Rico business was fully integrated into SCI. Not consolidated, but integrated in terms of its operation, in terms of reworking the organization to make it lean and mean and very efficient. So that's the third thing. The fourth thing The fourth thing I want to go to is that SCI is a dividend paying company, and you can see that we paid 3.2 million over the first 9 months of the financial year. We normally pay 2 dividends per year, so those 2 dividends would have been declared, and one of them would have been paid subsequent to the end of the quarter. So last year, same time, I think we would have paid 2.55 million in dividends. And for the third quarter, in terms of when the dividend that was declared, we would have declared 1.55 million this year versus, I think, 1 million last year. So as the company makes more money, we are giving back the distribution to shareholders, just like we said we would, right? Fifth thing I want to highlight, of course, cannot go without thanking the shareholders, whether existing shareholders or new investors in SCI who participated in that record preference share offer, which would have gone through in the last earnings call. So the only highlight here is that we would have listed those preference shares on the JC, and of course, everybody knows what's happening with the movement in the price of those shares. And lastly, but by no means least, this is something that I'm gonna, keep pushing on and keep putting brains front and center. I didn't do it before now because we had a lot of lumpiness in the earnings, especially during Q1. Is focus on return on equity. How we need to get the ROE in steady state above 10%. We're not there yet, obviously, but it's good to be looking and showing those numbers and explaining what's happening. So for the 9-month period, ROE is 8.2%. So it's getting close. For the quarter, it was 11.7%. And the objective, as we would have outlined in our strategic plan at the last AGM, was to have ROE above 10% on a consistent basis. So we're getting closer there. And of course, Puerto Rico is going to be a big part of maintaining that thrust to generate higher levels of ROE, which will translate automatically into very good earnings per share metrics, and very important for those investors who are investing for their pension or for their children's future tuition, or just to get income, as well as benefit from the capital appreciation that we have said that SCI will absolutely deliver to shareholders once the business scales in this new version. So those are the things that we focus on. So now into the actual performance highlights, starting with the third quarter. Everything was a new record. Net profit was 2.07 million, which actually this is the first time in SCI's history that for a single quarter the company is generating this high level of profit, which is above $2 million. Of course, embedded in that would have been $1 million coming from the value that accrued to SCI from its investment in Crescent Financial Corporation through SCI PRI and basically in the Puerto Rico business. And I'm classifying this as a recovery because for those of you who were on the Q1 earnings call, you remember that we suffered a loss, right? And I said that this loss was, I'm not worried. I remember I was not worried about the loss because it had to do with market volatility and the pricing mechanism used. And then last earnings call, when we got to 6 months, there was still a loss, but it was a lower loss than the Q1. And I said, I'm not worried. And here we are today. I'm still not worried. We have recovered, a decent amount of those losses. But in relation to where we were last year, we are still down. So if you look at when we go to the 9 months results, you're gonna see the effect of that, right? So I'm calling this a recovery. And it's instructive to, well, when I get to the next slide, I made that point. So total investment income 3.39 million, net investment income 2.16 million, all are new records and they're up by substantial amounts. Earnings per share 0.35 US cents. And I spoke about the dividends already. This is just showing it to you in dividends per share 0.00263 versus 0.001693. So that's a quick summary of the quarter. So the 9-month performance, net profit was up by 1.5%. It's the highest net profit over a 9-month period, but it didn't increase by much over the previous 9-month period for the very reason that I explained before, which was the effect of the adverse market multiples during Q1 and again in Q2 on the SCI's investment in Puerto Rico. So for context, right, when I was saying in the last two earnings calls that I wasn't worried, what has actually happened here, is that the level of profitability of Puerto Rico has increased by an amount that kind of offset any fluctuation that you have in the market multiple that you're using to do the valuation, right? So for context, the 9-month gain on the Puerto Rico Asset Accent Financial Corporation, or SCIPRI, is 594.8 thousand, right? But the actual net profit that the underlying company generated was several multiples of that 594,000. And that is due to the adjustment that I spoke about before, where we are using 2 years worth of look back data using price to book value. And because we're using 2 years worth of daily book value measures, then you went into COVID, the book values tanked, and we came out of COVID, the book values readjusted, and were very, very high. So we still have like a quarter and a half of very, very high price to book multiples. I know that the market has normalized when you're comparing your value today versus what the value would have been 2 years ago. Then the difference between those things is very large, and that's what has resulted in those unrealized losses, which we are slowly unwinding. So I'm still not worried, and I expect that as we go forward, we will see the benefit from the Puerto Rico business continue to increase, not because of any movement in price to book multiples, but because the underlying book value itself, because of the level of profitability of the business, is performing according to our expectations. So total investment income is a new record, 7.54 million. Net investment income, 4.22 million, also a new record. Earnings per share, 0.74 US cents. And dividends per share that would have been declared over the 9-month period was 0.00535 US cents versus the same period last year, 0.00431. If you go to the next slide, where we are looking at the actual summarized version of the income statement, right? Then if you look at the boxes that are highlighted in red, I just want to start by showing you at the bottom, you have the net profit, which, I said that at 2.07 million, that's a first. So that's a big milestone. We spoke about that already. But what I really want to zero in on is the Puerto Rico Credit Fund investment income, where you see for Q3 that 1031902. So that figure is, after you do all the adjustments that need to be made, that's the figure that actually flows through the income statement, right? But just for context, the level of profitability of the firm was higher than this 1.031 million. But the firm, as I said before, the firm is not consolidated up into SCI because it does not meet the accounting standard threshold for consolidation. 9 months period, that 594, that 594,568,000 that you're seeing, which is saying that's the benefit to SCI and its shareholders from making its investment in the Puerto Rico business. The level of the actual profitability that the firm generated was several multiples of that figure. So I'm just giving you context, right, to say sometimes fluctuation in market multiples can cause gyration, but we are not worried because the underlying value creation and the underlying long run trajectory of the firm is on solid path. So we're not worried about any fluctuation or gyration that may happen from quarter to quarter from time to time. And as I mentioned before, eventually in the near future, dividends would more than likely start flowing once the company reaches kind of steady state start flowing back up into SCI, which means more dividends available for shareholders, so that we can get to that higher dividend threshold level that we have been speaking about, and obviously that also higher earnings per share from the enhanced value creation in the Puerto Rico business. Last thing I want to look at is obviously fees. You can see that in Q3, the fees relative to Q3 last year was down substantially. And you may say, well, what's happening here? Well, nothing special. It's just that we had some fees that we had to reverse, and that therefore impacted the overall value that we're getting for the quarter. But you can see that for the 9 months, the fees earned, 282,609, is substantially up above the 164,000 from last year. And we expect fully that in Q4, we should continue to see a return to the path where fee income for this quarter is higher than last quarter. And on a go-forward basis, as we stated on the last 2 earnings call, we are trying to get fee income to come in north of about 30% of overall total investment income. That's like, the benchmark that we set ourselves. It's a very lofty goal, but we think we can do it, especially given the fact that the entire private credit platform of SCI now has more than 200 million US in private credit investments. Our private credit portfolio is more than 200 million US, right? And that gives us ability to do the large transactions that I spoke about in the first place, like what we did with that Jamaica transaction, where we are basically syndicating large transactions, and we expect to see much larger transactions on both the Puerto Rico side of the business as well as the Spanish-speaking side of the business, as well as the English and Dutch Caribbean side of the business. Of course, net interest income continue to perform creditably as SCI continue to maintain its spread above its interest costs. I will skip past the next slide very quickly. Well, not very quickly, but just a few words. So the efficiency ratio for over the 9 months period at the end of March. So this is not the March efficiency. This is over the year to date to the end of March. The efficiency ratio was 44%, relative to the same period last year of 38.4%. And the reason why the efficiency is above the 40% threshold, I would have explained it already, is because in Q1, our net profit was, our revenue line was hit by the loss, the unrealized loss from the investment, the market multiple, adverse market multiples on the Puerto Rico business, which, as I said before, we are recovering that, and you saw the recovery in Q3. So hopefully we get there by the end of Q4, where we fall back below that 40% threshold. But as I said before, over the medium term and in steady state, I'm not really worried about this threshold being, us being very far above the threshold, outside of like one-off increases in certain expenses due to inflation. And we have seen inflation affecting a number of cost items. But yeah, we are pretty comfortable with where we are. On the management expense ratio, there are no issues. We are substantially below the 2.85% threshold, and this is actually, perhaps of the two, is perhaps the more important cost efficiency measure, because it's saying how much of the asset that you have under management is going into expenses. I want to keep that at a very low level. Because once you keep that at a low level, it means more dividends for investors and higher earnings per share, etc. On the balance sheet side, shareholders' equity, I think at 70.82 million. I think that should be a new record, I think. I think this also is after we would have accounted for the dividend that was paid in April, because those dividends would have been declared before the end of this quarter, and so they would have been accounted for from equity. So the 70.82 already took that into consideration. So I think this is actually perhaps a new record for shareholders' equity. And on total asset side, 198.61 million. That's not a new record because we were at 206 million March in December. The reason why the total assets is down by about 8 or so million is because we obviously would have done the prudent thing after raising new capital in December, would have paid down our revolving credit lines so that we are not incurring unnecessary interest expense. So those credit lines are available so that when we are ready to call on those credit lines to deploy into new interest earning assets, we draw on the credit line and the interest expense and those liabilities start accruing and matching the investment in the asset. And obviously, because we are investing in assets that are earning a higher rate of interest than the cost of the borrowing, they will earn a spread. And that's what any prudent investor would do, and that's what we are doing to enhance the value for shareholders. So don't be too alarmed about the fact that the total assets would have come down from the record level it was at in December. It's because we paid down revolving credit lines so that we don't have that higher interest expense carrying. In terms of balance sheet, general metrics that we look at, obviously we are continuing to prudently utilize leverage, and our leverage metrics are obviously adjusted for preference share versus straight debt. So all of these metrics would have improved substantially because of the new capital that was raised in December. You can see debt to total assets now 0.229 versus 0.46 last year. Asset coverage ratio 2.76. Obviously, because we raised 50 million, paid down some credit lines, and then went out and deployed 30 odd million almost immediately. So there was literally no time lost between raising the capital and deploying out a very substantial portion of it at very nice yields, right? So obviously our asset coverage is going to improve substantially. And then net debt to equity, when you factor in how much cash we have on the balance sheet, and then the adjustment for preference shares, obviously net debt to equity would be well within what our 2 times limit is, and well within what our target ratio is, which means that we need to get this target ratio up a little bit. Our comfort spot is about 1.25 times. We are below that now, which means that we have excess cash that we need to utilize, which obviously from the close of the quarter to the close of the financial year end, we have work to do, which we are actively doing because our pipeline is very strong. And in terms of margin, we continue to maintain that there are about 500 basis point spread, even though we are in a tough interest rate environment. Because remember that our business, we're not charging super high rates, right? We are charging an appropriate rate to solve a client's problem, and typically the solution that we have for clients, they can't get it from a bank. And our capital reside in that habitat between where people go and raise equity and where people go to the traditional debt market, or traditional bond and bank market for debt, right? So obviously we charge a premium, but we are solving a problem that can't be solved. So moving now into the activity for the quarter in particular. So portfolio company investments are now at 180.81 million, up from 141 million last year. This of course includes the 28.40 million investment that we have in Puerto Rico credit fund. And just for clarity again, if you recall, on the last earnings call, we represented that we would have increased our investment in the Puerto Rico credit fund by 3 million US. And there were a number of questions around that, and I said that we were doing that because we felt that we could generate more value for shareholders if we use some of the investments, the money that we are getting back from investments, in SCI to deploy into the Puerto Rico business, simply because the Puerto Rico business is growing faster. And based on the deployment that I would have shown you on the first slide and what I'm going to show you on the second slide, that investment was justified, right? So, yeah, and obviously, as we go through time, from time to time, we're going to come again and say, hey, we have perhaps made another deployment of capital into the Puerto Rico business. Why? Because we are generating perhaps a better rate of return than we are generating. Our commensurate rate of return for the investment, which results in enhanced value creation for investors. So I just want to make that point that whenever we give information, and we provide explanation, we try to come back and circle the wagon to say, hey, this was what we said, here's what the result is, and so that you can create a platform to analyze whenever we give certain information that is new, what you should perhaps try to use that information to do. Because we really, really want investors who are invested in SCI for the long term, and medium term, short term as well. But yeah, those who are here and believe in the vision, to understand what it is that they have, the value that they have in the palm of their hands, right? And as I said, the company is just starting to scale, and there are a number of things when we get to the strategy section that I'll walk through again, and I'll do this every single quarter, just so that investors have a very good appreciation what it is that we're trying to do. Portfolio company investments still at 35. You might say, well, how comes the value of investment increase and the number of portfolio companies didn't increase? Well, that's because I showed you on the first slide that we deployed record amount of money. What I didn't show you was that we also exited, a lot of money, right, from 7 portfolio companies. So those exits is what would have resulted in the number of portfolio companies remaining the same. Because we deployed new capital, but we exited 7, and therefore on a net basis there were no changes. But obviously, the value of the investment that we exited was less than the value of the investment that we would have deployed. Hence, the overall value of the portfolio increase. Spoke about in new investment commitments already for SCI. Proper or the English-speaking Caribbean, 34.75 versus 18.38 last year. The yield, fairly flat, 14.6% versus 14.5. That's fair value yield. Tenor, fairly flat as well, 1.6 years versus 1.5. Again, we are generating what I call a nice risk-adjusted yield, and I want to make this point. And I think we made it each time we raise capital, but I need to make it today. So, when you invest $1 in SCI shares, right, that dollar goes into real businesses that creates employment or solve a problem for consumers or provide services, or whatever the situation is, right? It is adding to the real economy. And by doing so, it is creating value for you directly and indirectly, because that means more taxes are collected by the various Caribbean territories, which end up in more hospitals, better social services for you, right? But we turn around and then pay out the majority of the profitability from those investments, from those companies, back to you as shareholders, right? And then you also still own the company, or own shares in the company. So you're basically having your cake and eating it, because we are paying what I would term substantial dividends, which we expect to increase as the business scales. You scale with it in terms of the income that you're earning. So this is a very important point to make, and I'm making it because this is not a regular, top per share bond, right? That is paying income. Because think about SCI, if you include the Puerto Rico business, you have more than 100 underlying investments. So you have a level of diversification across different Caribbean territories and different industries and different sub-industries, right? that is generating this income that you are getting in your hand. So it's very important to understand what it is that you have invested in, and the tenure of the investment is not very long. As you can see, 1.6 years, that's like, very short, very short term. So again, I want people to really appreciate, and every time I come on the call and I stress a point, I want you to just, if you don't understand what I'm saying, ask some question, ask follow-up question, call me one-on-one, ask anybody at SYGNUS that you get additional information, because it's important as shareholders that you do not maintain a short-term view, right? And be looking at market gyration. Important that you focus on creating wealth and building value. And this company, SCI, that's what our mandate is, to create wealth and build value, while at the same time giving you income in the palm of your hand. Anyway, I digress. Dry powder on the balance sheet, dry powder at 11.31 million versus 3.71 million last year. And this does not include 4.32 million of undrawn credit lines, right? So net, you're talking about 14.6 million in available dry powder, which obviously some of that would have been substantially utilized since the end of the quarter. Of course, we continue our discussion with our international financial partners. I think in one instance, one of the facilities would have received first level approval. I think we are on the brink of a breakthrough in terms of being able to come and announce to say, hey, we have closed the first of the two. So we continue to push very hard on that, and hopefully in between now and the next. And I said this last quarter as well, but I think we are very, very close. So that would be some good news again. In terms of the Puerto Rico business, I already said that they generated a record deployment, and I told you how much they were up. The average value of the credit portfolio, 82.14. Of course, I would have also said that they would have syndicated a part of the portfolio. So the actual value of the portfolio is lower than 82 million now. But obviously, when you syndicate down, you get some fees from doing that, right? Which is what would have also translated into the record net profits that they would have generated, both for the quarter and for the 9-month period. They did a decent job during the quarter in terms of new investment commitments. It's just that SCI outshone them for once. I'm pretty sure that they're gonna go back to outshining SCI. Certainly for the full financial year, and perhaps for the fourth quarter as well, because their pipeline is pretty sizable. That business also is raising its own capital from the Puerto Rico market, and so the growth there is expected to continue. Phenomenal business, and phenomenal decision by SCI and shareholders to support this investment, and kudos to the Puerto Rican team and to Dr. Ike Johnson and James and Raul and Pablo executive team in Puerto Rico for doing a phenomenal job in Accrescent's 20th year. Well, I guess they are now in their 21st year of operations. And sing their praises enough. Phenomenal team. In terms of risk management, not much has changed from the last quarter. Non-performing investment ratio is now 0.8%, and that's because the portfolio size has increased while the non-performing investments have remained constant. In terms of stage 3 assets, that remains at 2. There were no new write-offs. Of course, our threshold is to have non-performing investments below 5%. In terms of updates on the Cayman hospitality asset that was written off, we continue to follow through on that. No new update, as I keep saying each quarter. I'm not really holding out a lot of expectation for a big recovery, but that does not mean that we are pushing very hard. We are pushing very hard, going after all that are and who we need to go after to try and recover value for shareholders. If we do, that will just add directly to the bottom line, in that we have taken this write-off already. In terms of the Jamaican hospital portfolio company that went bankrupt and was sold, our expectation is that we should recoup substantial, if not all our monies there. And as soon as I have further clarity on that, which I think we are pretty close to getting there. But as you know, with bankruptcies, these are legal matters, and you know, when it comes to the law and following due process, there is always time, and so we just have to go through the process, as they say. You know, all Arsenal fans out there, you know what we are talking about, going through the process. And the final stage 3 asset mining and quarrying, just being prudent as we go through each quarter, and there's no resolution. We take additional charge on those assets. If at the end of the day, when we try to recoup fully from the assets, we get more than the charge that we are taking, then again it will just add straight to the bottom line. So that's our preference to deal with these things. Next slide just shows you, the balance sheet expected credit loss charge, which has remained fairly constant as the portfolio value has increased, and I expect that this is going to perhaps tick up slightly again as we add new assets to the balance sheet, which is to be expected. Again, important to note that I think this ratio is probably even lower now because the size of the deployments that we did during the quarter. I think this is probably now historical realized losses less than 0.4%. I think this is probably closer to 0.3%, getting into the 0.2 something percent. And long may that continue. Next couple of slides, exposure by industry. You can see financial is the largest exposure, followed by construction. And this construction is really influenced by what's happening in Puerto Rico. And Puerto Rico construction industry is booming, and that's because there's over $50 billion in earmarked capital for infrastructure development in Puerto Rico. Puerto Rico also has something called Act 60, which provide tax benefits. And those tax benefits, they are actually, I want to use the term lightly, but they're actually quote unquote tradable, right? People can actually sell them, and SYGNUS Credit Investments Puerto Rico, aka SYGNUS, has actually been one of the first companies in Puerto Rico that has used some innovative financing structures to allow entrepreneurs and small and medium-sized firms to not only access those tax credits, but to optimize them by perhaps trading them or using them as collateral to finance transactions. And I think that's something that perhaps other Caribbean territories can I don't want to say copy, can look at deploying for certain industries and in certain circumstances. And I think at a different event, which is the launch of the Caribbean Resilience Fund, I think I brought up that point that when people are trying to fund like renewable energy assets or trying to mitigate against climate risk, those are some of the perhaps innovative structures that can come to bear. If you're importing equipment that is focused on renewable energy or climate, etc., perhaps some of these innovative solutions like tax credit can be utilized to give to make the financing of those structures more bankable. On the region exposure side, of course, Puerto Rico maintain the majority there, as it has for some time, and you can see Jamaica a close second at 26.7%, Puerto Rico 32.9%, St. Lucia 14.6%, Bahamas 9.6%, and the rest down the list. So yeah, well diversified portfolio in some very strong companies. So finally, in terms of outlook, first thing is our whole focus for maybe the next 18 months, we're gonna sing and dance this every day, is to scale the business in Puerto Rico. We started that from July 1 this year, and you can see the results in the record deployment, record origination, record profits, right? And we will continue to do that. The Puerto Rico, so SCI, is gonna also be looking to sponsor, a new investment fund in Puerto Rico, which are providing more information on. I think in when we get to the audited financials or the annual report, because SCI is very serious and taking on the responsibility as a pioneer in the private credit space to focus on the impact investment themes. And so that impact fund in Puerto Rico, and by the way, the Puerto Rico business is already invested in 3 impact funds, right? But this would be the largest at over 100 million. The capital raising for that would have started. So that's just SCI being a sponsor, which means that SCI perhaps invest between, let's say, probably no more than $3 million, and will generate returns from making that investment and getting cash dividend back up into its financial statement, which then can flow back up into SCI proper. And this would be separate and apart from SCI's majority investment in Accrescent Financial Corporation. And obviously, Accrescent Financial Corporation itself, is also raising capital to expand that business, which is directly related to SCI's 95.6 or 8% share ownership. So there are 2 parts to which the Puerto Rico, Spanish-speaking Caribbean part of the business will generate additional revenue and therefore cash flow back up into SCI shareholders as we ramp up the business. Now, in terms of SCI's overall growth path, I'll just give you an update. We said we wanted to be participating in $1 billion in private credit transactions across the region, including syndications, and we are well on our way. Of course, we'd have done 114 million US in deployment in only 9 months since we made this commitment, right? And we're talking about impact fund in Puerto Rico, which if SCI is the sponsor, then obviously all transactions that fund does, SCI is gonna be a de facto participant in that. You also have an adjacent another impact fund that was launched recently that more than likely SCI is gonna try and see if it fits its mandate to participate in. And if it does, that will also widen its footprint to also co-invest alongside those impact funds to widen and broaden the scope of its operations as a private credit investor in the debt portion of those funds. Spoke about core revenues to get to 12.5 million. You can see we are well on our way. That's in progress. ROE above 10%, again in progress, and I gave you the update on that already. We got for Q3, but not quite for the financial year, but we are getting there. Rome wasn't built in a day. We are very focused on getting there. EPS growth, we want to grow by 20%. That's in progress with all the items that we have outlined. Incidentally, we are also, at the start of a Caribbean, English-speaking Caribbean revenue enhancement strategy, which means that we are building out, another platform in the English speaking Caribbean, which when that over the next, I would say 2 to 3 quarters, when that gets more advanced, I can shed some more light on that. But just highlighting that we spoke about this at the AGM, so I'm just representing it, but I haven't put it here because there's no flesh on the bone as yet. Dividend yield, I think based on the share price, we are 5%, but we want to focus on the APO price and get that up, and I spoke about that earlier. And credit facilities, and capital raise in general would have raised 50 million, and we have 60 million of the 100 million in credit facilities that we are discussing, that I updated already. Impact strategy, would have introduced that last quarter. We have no new update at this time. I think by the time we get to the annual report, we have a fulsome strategic and policy around how we are going to treat with impact investment, which will include being a co-investor alongside other funds. Once we are generating the target returns that SCI needs to get to deliver the dividends that we want, and the EPS to SCI shareholders. We'll also speak about, where appropriate, taking small exposures into impact funds, whereby we are taking perhaps some kind of exposure where we can get upside returns while getting cash distributions back, and then which means that we would be kind of sponsor our investor in these funds. And then finally, share buyback. We would have done an additional buyback in March. We bought 2.4 million shares. We focused on the JDR shares. Average price of $11.94. We couldn't believe our eyes that the shares were trading that low. So we bought shares below that. We bought shares at prices well below $11.94. That's the average. That's the weighted average price, right? And as I keep saying over and over and over, the book value of the company, based on the assets on the company's balance sheet, based on the strategy that the company is utilizing, whenever we see the shares at ridiculous levels, we go in and just clean the board, which is what we did on this day. We cleaned the board, and obviously, just left that there. So we're gonna look to clean the board days as we go through over the next 2 years mash of the share buyback program. Yeah, and that's the end of the presentation. We can take questions now.
Yes, thank you for that detailed presentation, Jason, going into various performance metrics and financial information of SDI. We'll now jump into the Q&A section of the presentation. I encourage everyone to submit their questions in the Q&A section. The first question we have, Jason, is, so we've been speaking of the credit lines, or the international credit lines, of 100 million for the past number of years. Can you just update us on what progress has been made?
Okay, so I wouldn't say number of years, I would say perhaps 18 months. So the progress is very simple. We are speaking with multilaterals, our multilateral affiliates, and typically, even if you are the biggest financial institution in the world, the multilateral affiliate process takes minimum 6 months, right? So from the day so this 6 months is after you have gotten to a stage where a transaction can be done. This 6 months does not include the courting period. So we spent a very long time in a courting period, and we are still in a courting period with one of the multilaterals. But the other one, we have gotten past first level approval, and so the update is for one, which is for one transaction, for one with two multilateral or multilateral affiliated agencies. And for one of them, we have received first level approval. We have submitted everything, meaning, term sheet, sign everything, right? What remains to be done are some what I'm calling housekeeping stuff, because to get this financing, you need to have, for example, ESG policies that fit their criteria. You need to have things like, employment policy, a number of different policies and criteria that have to specifically fit what they want, right? And so what you find happen in many instances is that we have to make amendments to what we have presently to fit exactly because basically you have a template and you might have 10 things on it that you need to do. You need to fit 1, 2, 3, 4, 5, 6, 8, 9, 10 things. And we might fit 7 perfectly, and then 3 things we fit it, but it's not exactly as how they have prescribed it, and therefore we have to make amendments, and it takes time to make those amendments, right? So that's basically what's happening with one. And the other one, we are still going through the negotiating process in terms of the structure that would work best for them. Remember, SCI is a Caribbean entity. It has a very unique structure in terms of what it's doing. SCI is not a bank. We're not taking deposits, right? So the template that you could use for a bank that take deposit, etc., is not the same template that you can use for a private credit company that is doing very customizable investments. So basically, I have to create a solution from scratch, and that's what we're working through with the second multilateral to ensure that we get the type of financing and the structure that we want that will benefit us and the shareholders, and the multilateral get on their side a structure that they can bring to their board that they know the board will approve. So that's what's happening, and these processes are just long. You can't get around that length of time. The good news is that once the process is completed, then it means that you know what the process is, and all similar type entities that exist, and there are quite a few of them, then it becomes very easy to approach multiple different similar type of entities and get different types of access to financing to grow and expand and scale the business. So basically, we are in the baby birthing period where there's a lot of there's a lot of pain, but once you go through the process, then after that it's just joy and growth. Knock on wood. So that's how I would answer that question to provide specific response.
Yes, Jason. Thank you for that detailed explanation and response. I think we've been doing such an excellent job in providing additional details during the earnings call presentation. We've only received one question, so unless there are any other questions, I think that would be it for the Q&A section of the earnings call. So thank you again, Jason, for the presentation and responding to the various questions. And thanks to everyone for joining us this morning. I'd just like to remind everyone that has joined us that the recording will be available on our website, as well as the detailed financial statements, along with the MD&A and audited financials. Good morning again, everyone. Thank you for joining.
All right, this is our first. I hope we can have many more.
Yes.
Okay.